What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I literally just posted a video on the stock if you're new to this channel, and I've been buying and loading up on these guys, and they just made a dividend announcement to hike their dividend again, which is amazing. These guys are less than $20. I own 500 plus shares, so if you are a loyal subscriber on the show, you already know which one this is. So that's the first half of this video. The second half of this video, I'm going to discuss MPW, the real estate investment trust that has a lot of controversy going on, a lot of discussion, and I'm going to express my thoughts. I'm going to tell you what I plan on doing with these guys. And again, this is not financial advice, for entertainment purposes, only disclaimer in the description. So if you're new to this YouTube channel, make sure you subscribe. You got to hit that notification bell, of course. Smash that like button. Let's check these two REITs out right now. I just wanted to make an announcement. Arbor Realty Trust, they announced their third quarter 2022 results and increased their dividend for the 10th consecutive quarter at 40 per share. So in the top right hand corner, I did a review on Arbor Realty Trust. So I'll have that in the top right hand corner. But their dividend growth is phenomenal. So let's check that out real quick, and then we'll go to MPW. So again, make sure you hit that top right-hand corner. I do an in-depth review on these guys as a real estate investment trust, and I like these guys. They're a high-yield dividend stock. So right here, 2016 it was at 15 cents, and 2016 it was at 16, then 2017 it was 18 cents to 19 cents, then to 21 cents to 25 cents to 27 cents, and you get a special dividend of 15 cents, then 27 to 28, 29 to 30 in 2020. Then to 31, then to 32, then to 33, then 34, and they're at 40 from 2021 to 2022. Payout ratio is 73%. Number of dividend increases in the last 5 years is 18. Dividend growth in 5 years is 13.14% now. So if you bought one share, you made 156 with a 10.78% dividend yield. I'm telling you, this is one I love. I may just go to 700 shares and then just reinvest the dividend. So I'm earning a lot of dividend income this quarter with these guys, and it's quarterly dividend stock. So I encourage you to check out the top right hand corner. So let's check out the stock that you guys wanted me to review on, MPW. Let's check that out. So MPW, Medical Properties Trust, is sitting at 11.33. It has a dividend yield of 10.24%. A PE ratio of 5.43. Remember, FFO is more important. Average volume 18.94 million. Market cap 6.79 billion US dollars. Its year range is 990 to 2413. Day range is 1098 to 1148, and its previous close is 1126. So I like dividend stocks with dividend growth. Now, the most important thing is looking into the nitty and gritty with real estate investment trust. That will get your answer. Because you look at what happened with NLY and IVR, and I just reported my dividend income with IVR, but it was such a risk. It was a dip. I was going to maybe sell it as a profit. That was just play money that I put in. This is one that I'm going to be long on, and I'm going to explain to you why. So let's do a review on these guys as a company. So this is huge. They have 434 properties, 44,000 licensed beds. They're in 10 countries, and they have 54 tenant relationships. So they work together for high caliber, for-profit, not-for-profit hospital operators around the globe. So I'm going to go over the company and their capabilities and their portfolio. So on their website, as a company, it says, we understand healthcare, we know the hospital needs, and we have the capital resources that can help. MPD is a financial partner that offers more resources, more capability, and more ways for operators and investors to seize financial opportunities. So their portfolio, who we are, the second largest non-government owner in hospitals in the world, experience in unlocking the value of hospital real estate growth, preferred by top operators around the globe. 62% of it is in the United States, 18% of it is the United Kingdom, 6% is Switzerland, 5% is Germany, 4% is Australia, and 1% is Spain. Now we're going to go a little bit more into these guys. So MPD's unlocks capital for growth. Hospital operators turn to MPD for their capital needs and industry experience and expertise. We provide up to 100% of the hospital's real estate value to fund the facility's expansions, investments in people and technology, and the execution of long-term growth strategies. Ultimately, we help hospitals serve patients better around the world with our capital solutions. They said the word world. That's one thing that attracted me to buying these guys. MPT helps hospitals unlock the economic value of existing buildings and real estate, releasing new capital for new/expanded facilities at existing or new locations, supporting the development of programs and services, recruiting new physicians and staff, and investing in new technology and equipment. Travel nurses, recruiting new physicians and staff. Maybe they can help me out if I want to look for a future job. All right, now let's look into a few other things. So now we have to look at their property types. General acute care hospitals, behavioral health facilities, inpatient rehabilitation hospitals, long-term acute care hospitals, freestanding ER and urgent care facilities. So they have 100 general acute care hospitals for surgery, acute medical conditions or injuries, or usually short-term stays. Appendectomy. Somebody has an ostomy bag. They have to have an obstruction. Behavioral health facilities. Mental health is terrible right now for mental, social, and even physical illnesses requiring hospital care. So that's important. Behavioral health, that's becoming a big problem. And believe me, the behavioral patients I take care of in the hospital, draining, mentally draining. Inpatient rehabilitation hospitals for recovery and intensive rehab after injury or illness. So people that get sick and maybe have a stroke, recovering from a heart attack, COPD, emphysema, cardiopulmonary rehab, that type of stuff is important. Now, let's look at their property map. So look at their geographic location. They're in North America, South America. They're in Europe, which is huge, and they're in Australia. Now, let's look at the facility types. So look at some of their properties that they are landlords to. So St. Elizabeth's Medical Center, Southern California Hospital at Culver City, Knox Private Hospital. Those are kind of big buildings. So you're a landlord, and believe me, healthcare is in demand right now. The people are getting sicker. There's readmission rates that are higher with CHF. It's terrible, honestly, with people not taking care of themselves. I mean, I'm doing a nephrology rotation right now, and it's really sad to see the way people just don't want to take care of themselves, and they get worse and worse when they go to the hospital. They don't want to take care of themselves. So the obesity rate's getting terrible. Baby boomers are getting sicker. There's a rise of diabetes. That's a problem. It really is. And these guys, as a company, are a landlord for numerous hospitals. And they collaborate with numerous hospitals. So that's one thing that they have going for them. And they have 400 plus facilities. But we need to check out their revenue and their dividend history because they're 1133. It should be a lot more. Are these guys undervalued or overvalued, or are they overrated? So let's check out the revenue and dividend history. So looking at the revenue from 2015 to 2021, this is in millions US dollars. There's an increase in revenue every year. 2015, it's 441. 2016, it's 541. 2017, 704. 2018, 784, 2019, 854, 2020, 1249, and then 2021, 1,544. So the other thing was people were scared to go inside the hospitals during the pandemic and go to rehab facilities because they were worried about getting the bug. Now, you can almost walk in a hospital. I'm just going to say, some hospitals, you don't even have to wear a mask anymore. So just depends on the danger zones that they kind of refer to. And I can tell you, the place I'm at currently, I don't have to wear a mask. I do wear a mask, though. It does prevent the spread of nosocomial infections, and I don't want to get my patients sick and be an asymptomatic carrier. So I do wear a mask. So let's jump to their most recent revenue. So check out this increase in December 2021. The revenue, $416.19 million, it went up. Net income went up 206.54. Diluted EPS went up 75%. Net profit margin went up 53.08%. And in December, it was 49.63%. The operating income went up 26.19%. March, the revenue went up $417.14 million. The net income went up $631.68 million. Diluted EPS went up 1.05 to 275%. Net profit margin went up 151.43. It was up 241.98%. Operating income to $81.8 million, up 11.52%. Net change in cash was down 206.81%. June, revenue went up $415.01 million. It was up 6.65%. Net income $189.6 million. Diluted EPS 0.32. 68.42%. Net profit margins 45.68. Operating income $270.68 million. It was up. Net change in cash was up. September, revenue went down by 8.58%. Net income went up 29.6. Diluted EPS 0.37. Net profit margin 60.96. Operating income went down 12.17%. So when I look at real estate investment trust, I look at the demand, like NNN REIT, Spirit Realty Capital, Realty Income, Agree Realty Corporation. Those guys are in demand. And these guys are in demand. So sure, the revenue went down. Whoop-de-doo. Okay, people are freaking out. But remember, they have a lot of facilities and people are sick. So hospital readmissions are going up. I'm thinking about that. You know, people coming into the hospital, they're going to try to cut cost eventually. This travel nursing gig, I mean, they're paying me a buttload of money to be a travel nurse. And, you know, that's eventually the rate's going to start going down. People are going to start caving in. And there's no way that you're going to, you know, get these rates as much anymore, possibly. So that's one thing that's going on. There's, again, these facilities will do anything to stay open. So now there were some facilities in my area that closed, but they kind of said that there was no staff, which I think is a lie. Economically, they were not doing well to begin with, and financially, so they just kind of pulled the plug, and they were not doing well before that. But these are looking at the portfolio of these guys are well established facilities. So that's one thing that's very interesting and in demand for these guys. They're in very strategic locations. So I'm going to go over their dividend history real quick. So let's start in 2014, it was 21 cents, then 2015, 22 cents, and 2016, 23 cents, then 2017, 24 cents, then 2018, 25 cents, then 2019, 26 cents, then 2020, 27 cents, then 2021, 28 cents, then 2022, 29 cents. So the dividend growth in 5 years is 4.04%. The payout ratio is 63%. Number of dividend increases in the last 5 years is 5. So if you bought one share, you made 116 with a 10.30% dividend yield. So what I plan on doing with MPW in my M1 Finance dividend portfolio is get to 100 plus shares and have these dividends from these guys buy some of my other dividend growth stocks. So this is what I plan on doing with my high yield real estate investment trust and high yield dividend stocks like AFCG Gamma and Rhythm Capital and MPW and OHI, is get enough shares to where I can have distributions of these guys going into buying stocks like Starbucks. And so far, this dividend strategy has worked because certain dividends distribute dividends at a certain time. And if I can have enough dividend income to just start buying all these shares, they're going to start buying more shares of these. And then it's just going to keep on going. So the goal is to get to 100, 400 shares in a lot of my dividend stocks on M1 Finance. Then I'll never have to touch it again with putting money in and dollar cost averaging and all that. And then I can focus on my E-Trade dividend income for other dividend stocks. So this is why I'm buying these guys, is for obviously dividend income. The dividend growth there. Things could blow up in my face with these guys. Big deal, because I'm still buying other shares of stocks like Regions Financial, JP Morgan, like I said, and IIPR, and those type of stocks, Ally Financial, Coca-Cola, blah, 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 Unilever. You kind of get what I'm saying. And I'll show you the changes that I made with my dividend portfolio in M1 Finance. So I know I've been blasting QYLD and RYLD and XYLD, but they do have some relevance with a dividend investing strategy, that you have enough shares that they start buying some of these dividend stocks like this. I'm sorry, not like these guys, but like JP Morgan or Starbucks. And you just start loading up like crazy buying your dividend growth stock. So this is the type of strategy that I'm implementing. It has been working. The dividend growth is a little bit slower compared to LI and some of these other dividend stocks that I have done videos on. But this is what I kind of like about MPW. And I'm going to be long. I'm going to confirm that I'm long unless if something drastic or crazy happens, like with Store Capital. There would have to be a really big change to happen to like really change my mind, just dump them and just never touch them again. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Start Dividend. You guys have a good one. I hope you enjoyed this video. And make sure you hit that notification bell after you subscribe. Take care.